What's up, guys? Got another video for you here today. We're going to be going over, does Tesla have a demand problem? Were the price cuts because demand is slowing, or was it just to qualify for the $7,500 EV credits? We'll be going over a CNBC interview with Colin Rusch. He's ranked number 8 out of over 8,000 Wall Street analysts. He's one of the best people to listen to in Wall Street, in my opinion. And let's hear what he's got to say.
Oppenheimer senior analyst Colin Rusch, how do you read the price cuts, Colin? Some people are saying it helps them actually qualify for some of the EV credits and the new legislation to have lower prices. Do you think it's a demand story? What is this about?
This is just an offensive move. You know, with them cutting prices and the help of the EV credit, demand is just going to soar.
Yeah, I think it's multiple things. You know, one, certainly there's some concern around demand, and all the commentary around going into a recession. You know, it looks like there's some inventory that's been built in China. But I think this is, an example of a good offense being a defensive move. I think they're going after this market, getting into consumers' homes, building some goodwill with folks around the price moves as folks make some decisions around buying new vehicles. And they're going to push a lot of product into the market as a result. We still think there's very compelling economics from a total cost of ownership perspective for EVs, and this makes it very compelling both in the US and Europe with where these prices are going to shake out.
It's just going to boost demand. Also, Tesla has the second highest gross margins of any automotive company. I know they're much bigger than that. They're an energy battery company and tech company as well. But just from the automotive side, they have second highest, only behind Ferrari in gross margins. So a lot of the legacy automotive companies are losing money on their EVs. And now with Tesla lowering their cost, it's basically for range, it is the cheapest EVs out are Teslas. So, if you're not making money, these other companies aren't making money on their electric vehicles, and then Tesla lowers their cost, the consumer is going to basically it's going to be a no-brainer on which car they are going to want to choose. A cheaper, better range, better technology, full self-driving, better safety, better performance, and it's cheaper. It's just like they're basically just killing the legacy automotive companies.
So where does valuation stand now that Tesla's had such a big sell-off over the last year versus estimates, with some still cutting, saying the numbers are too high?
I think it's absolutely ridiculous if you think that the stock is priced still too high. Right now, they're trading at below 40 PE. They grew at 40% during a recession this past year. We'll see when the Q4 earnings come out next week at what their revenue growth was. I think it's going to be close to 50%, which is just unbelievable. The S&P fell by 20%, and one of the sixth worst year in the past 100 years for the S&P, and you're growing at 50%. And, as Peter Lynch has said, if a company's growth rate is higher than its PE, that's when you know it's a buy. So I think it's unbelievable that they're have a higher growth rate than their PE. Also, I'd like to say is their production for last quarter was around 440,000. You multiply that by 4, it's right below 1,800. They basically only need to increase by around 15% in production, which I think they'll exceed that well over 15%. And that puts them at over 2 million vehicles per year, by the end of 2023. 2 million times the 50,000 average selling price puts that at around 100 billion in revenue. Now add in the new Lathrop Megapack plant with 40 gigawatt hours of battery packs. That gives you at over 2 million per times 10,000. That's another 20 billion. So this year I see them growing at another 50% during a recession. So if you think that they're overvalued at a forward PE of around 20, I don't know what to say.
Yeah, I think we're waiting for the fourth quarter numbers to look at where they shake out in the fourth quarter, because they didn't sell everything they produced, and so there's potentially some headwinds there. We're also seeing a lot of the commodity prices come down to levels that it could turn into a tailwind for them on margins going into 2023. I think we're looking for some incremental information from them when they report here about where margins shake out. Historically the company's pointed to Porsche-like margins in the mid-30s as a potential for the company, and and certainly this is a process of industry building and a technology node change, and so there's going to be some ups and downs here. I think we want to see where it's going to level out here in the next quarter or two, and start thinking about what this looks like long term as some of the new models get into the market. But I think that we're going to see a little bit of a dip on this pricing dynamic, and we'll see things start to level out by the second half of the year for the company.
A year ago, Tesla raised their prices for the cars because they were, just being ahead of the game with inflation. Also, the cost of materials was raised substantially. So now as interest rates rise and the cost of materials to build the vehicles starts to go down, they can also bring the cost of their vehicles down. So if you think that them just lowering the cost of the car is just a straight dip in margin, we'll have to see. I don't think it's going to be as big of a dip as people are thinking. I think that the cost of materials is going down, and with the help of the ramping up in the initial stages of ramping up, that's when your costs are the highest. And as you start to get into the flow and you start to increase production, the cost will go down. So I think margins could stay the same, but time will tell. We'll see in Q1, and I think that's in March. So we'll just have to see as time goes, but I'm as bullish as I've ever been. I think this is the greatest opportunity. I thought, in this past couple of years as it started to ramp up that, damn, I wish I could have, just gotten more and more at these lower price levels. People don't understand how big that this company is going to be, and that it's just still in the beginning stages. Thank you guys for watching. My name is Sean. I'm the Tesla Hyperbowl, and I'll see you guys next time.